Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. We made it to the end of the week. It's a short trading week, only 4 days. What's going on today? Well, we're kind of flat on the market. The Nasdaq and Dow were up a little bit. Now they're down a little bit. It's just bouncing above and below the flat line. Okay, so what did I do today? Well, today I had a small position on the SPY. I had it on and the went up a little bit. I took it off today. I'm pretty much all in cash, right? Cash is a good place to be right now, in my opinion. Now, here's where I see. Okay, so what I see is the QQQs, they're now up to the 50-day moving average. All right, so they're up against resistance. All right, the SPY is right below the 50-day moving average. It may come up a little higher and still touch it, but I don't think we're going to get through this 50-day moving average this time. I think we're going to come back down and retest the June lows. We'll see if I'm right on that. Now, this is a little bit of a short covering rally we're having, but I don't think it's the big short covering rally that I'm predicting. It's not violent enough. Short covering rallies, I want explosion higher. And I think that will happen. I just think we have more work to do of forming the bottom. And so maybe we come back down, retest the June lows, and then we take off, and then we explode through this 50-day moving averages. Now, we could get through this time around. We could, and I will be buying the market back at a higher rate than I just sold it at. So that I'm betting against. That is probably a 20% chance that we explode through the 50-day. There's probably an 80% chance that we come back and retest that recent low. That's my opinion. All right, so once we get that big short covering rally, I think we're going to push up towards new highs. Isn't that crazy? I think that the states are going to send out a lot of stimulus money, and I think that stock buybacks are going to happen. I just think they're going to push it up one more time before the big crash happens. All right, that's my opinion. Let's move on to the real estate market. Now, why do I say that? Well, what is the straw that's going to break the housing market? I think it's the recession. Now, why would a recession break the housing market? Well, it's called no jobs. If you don't have a job, it's hard to pay your mortgage. This is what's going to bring the houses down. It just is. Now, if you ask Susie Orman, she'll tell you that houses and the housing market does well in a recession. I do not believe that. A lot of people think this recession is going to be very short-lived. I do not believe that either. Can I tell you why? Let me tell you why. Okay, so, well, the Federal Reserve right now is raising interest rates, right? And we've already had 1 quarter of negative GDP, the first quarter, and I believe we'll get the second quarter, we'll have a negative GDP print, and that means we're in a recession. Now, there's some other signs that tell us that we're already going into a recession. One would be the inversion of the yield curve. Right now, the 2-year yield is paying more than the 10-year yield. Isn't that crazy? 2 years paying about 2.92, 10 years paying about 2.85. When this happens, it usually means we're already in a recession. Now, the government will figure it out 6 months down the road because that's what they're good at. They're good at telling you what happened. They're not good at telling you what will happen. Now, the government is raising rates into the recession. Okay, now to me, I think that's catastrophic. I think that's the wrong move. They should have had rates up so they can lower them. You know, to get out of a recession, normally it takes 4 or 5% decrease in the interest rate is what the Fed does to get us out of the recession. Now, this recession, we're raising into it. Now, okay, that's mistake number 1. Now, they're going to realize their mistake, but they don't have 4 or 5 percentage points that they can drop. What is the interest rate right now? Well, it's at 1.5. Now, if they get this up to 3%, I will be incredibly shocked. Maybe they say they're going to raise another 75 basis points, which would put us at 2.25. Okay, so maybe they get it up to 2.25, maybe they get it up to 2.5, but they're going to reverse course because they're making mistakes. They're raising rates into a recession, and that's just not going to work. Now, inflation is running hot. Inflation's running really hot, so what we have is, it's basically called stagflation, all right, where inflation is hot, and yet you have negative GDP prints. This is a terrible situation for the Federal Reserve. But then again, I don't feel sorry for them because the Federal Reserve is the one that caused office. So how are they going to reduce rates by 4 or 5%? Look let's say they raise it to 2.5. They got to come down 4.5, right? So 2.5 minus 4.5. Let me think. Well, that'd be -2. They would love to make it a negative number, but they can't do that yet. Now they do have plans how they're going to do that in the future, right? In the future, they're going to introduce the central bank digital currency. They're going to have a digital currency, and this way they can just confiscate your money with negative interest rates. They can't do that yet, but they will do that in the future, and they're going to probably have some bail-ins in the banks. You have your money in the bank is going to take some of that every month. Every month it's going to take less and less because they want to get to a cashless society, because otherwise we just pull it all out and take cash, right? So we take the cash out of the banks, and then they can't confiscate our money. But if there's no cash, if there's only a central bank digital currency, you can't take it out because they're going to confiscate your money, and this is going to happen. That's how they're going to get rates negative. But this time around, let's say they raise them up to 2.5%, and that we're in a full-blown recession by then, because it's coming. Believe me, it's already here. They'll tell you about it 6 months from now, because that's what they do. But okay, so we're in this recession right now, and we're raising rates into the recession. Stupid. But they created the problem because inflation's running hot. They got to raise rates, right? But eventually they're not going to be able to handle the pain. You see, they're going to raise rates until something breaks. And believe me, I promise you something's going to break. It's called the housing market. The housing market will break. You get interest rates on mortgages. You get them up to 7, 8, 9, even 10%. That housing market's going to break hard. And it's going to take the stock market down with it. Now, maybe the stock market breaks first and takes the housing market down with it. I don't know how that'll all play out exactly, but I know they're both going to break and they're both going to come down. And then the Federal Reserve is going to go, oh my God, what did we do? What did we do? And they don't know what they did, but they don't know what they will do. But what does the federal government always do? Well, they have two things they can do. Lower rates, but they can only lower them to zero right now. So they're going to lower rates back to zero. 2.5 is going to go down to zero, right? They're going to be back at zero in a heartbeat because they're going to panic is what they're going to do. All right, so they're going to panic and lower them to zero. But they can't get them negative, so we're still in the recession. What else can they do? What else does the Fed like to do? Oh, yeah, they like to print money, right? So they're going to print trillions and trillions of dollars. I mean, the money that we've already printed, that's going to be chump change. I'm telling you. It's just not going to be enough. I mean, we're at 31 trillion in debt, and that's just a national debt. You tack on corporate debt, you tack on personal debt, you tack on state debt, it's up around $70 trillion that are, we're in debt. It's kind of sad. But they're going to print trillions and trillions of dollars, 10, 20, 30 trillion dollars at a clip. This is what's going to happen. Now, what is that going to do? That's going to send us off into hyperinflation. Hyperinflation's terrible. Oh, the pain that we're going to feel when this happens is going to be really bad. Look, at hyperinflation makes your purchasing power. I mean, the dollar's just going to go away. It's not going to have any purchasing power, and that's what they're going to use to say, hey, we need to get this central bank digital currency going. That's what their goal is. That's what's all planned out for you. Isn't this lovely? Now, I don't mean to be this negative. Can you tell why I don't get invited to a lot of parties? I start talking about this stuff, and people get real upset. That's why I'm glad I got you guys, man, because you guys understand it. You wouldn't be listening to this channel if you didn't want to hear this stuff. So what we got is a problem. We got a problem. The Federal Reserve's going to break the housing market if they raise rates, and they're going to raise it until the housing market breaks, because that's just what they got to do, because they got to fight that inflation, the inflation that they created by printing $31 trillion of money that we don't have. But they created an inflation, but they'll tell you, we're going to use our tools. We're going to use our tools to fight the inflation. Well, they only have one tool. They to raise rates, and they can't can't raise rates because it breaks everything. Breaks the stock market, breaks the real estate market. Now, here's the thing, okay, so the Federal Reserve, they tell you they're raising rates right now. They're not raising rates. Look, they said that in June they were going to start tapering. They were going to sell $17 billion of mortgages in June. That's what they said. They were going to stop buying $40 billion, and they're going to reverse course and sell $17 billion. Did they do it? No, they lied through their teeth. Go to their balance sheet, go on the Federal Reserve, their own website, and look at their balance sheet. It's still increasing. Why is it increasing? Well, because they're still buying mortgage-backed securities. They're still buying bonds. That's what they do. That's all they can do. They don't have any other tools. But so what they do is they say, oh, look at us fight inflation. We're going to raise rates. And over here, they're still buying assets. They're still, it countersets. It offsets each other. It doesn't help. They have no power anymore. The Fed is pretty much powerless. They don't know what to do. If they knew what to do, they'd be doing it. But they don't have a clue what to do. So right now, we're raising that rate into the recession. And this is bad. This is real bad. I don't mean to scare you, but this is not going to end well. Look, they're going to raise it up until the markets break. The housing market, the stock market are going to break. It's just the way it is. But that's what the Federal Reserve's plan is. And then what happened is going to get really ugly. When they reduce rates in a heartbeat down to zero and they start printing trillions and trillions of dollars again, I worry for our country. I do. Look, if you can get out of debt, if you can save up some money, if you can prepare a little bit. I'm not a prepper. I don't think it's the end of the world. I hope we come together as a community and help each other out. Now, that might be optimistic thinking there, but I know I talk a lot of negative stuff, but I just don't see a lot of positive stuff in the financial markets as long as we have that Federal Reserve. Now, my whole plan would be to get rid of the Federal Reserve, and I know a lot of you agree with that. If you agree with that, give me a thumbs up today. Why not? Get out there. Have a great weekend, everybody. Hit the subscribe button. We can talk again next week. I'm Tall Mike. Bye-bye.